Alright, yo guys, what's going on? Welcome back to another video. And this one's a very important one to kind of get used to your model and understand it. It's going to be how to properly journal. So this is the training journal I use. If you guys want to use it, it'll be linked down in the description below. So you can go ahead and check that out. But we're going to first get into why journaling is so important in your trading. So I quickly moved over to a Google Docs here just to kind of show you guys in text form. Well, why is it so important to have a trading journal? And it's basically just to recognize what is the difference between your winning and losing trades. And a big thing I see people do is they don't journal their trades when they're back testing. And this is crucial when you're starting out and like starting a new model and trying to develop it and be confident and comfortable with it. Is they might say like, oh, I've traded like 2 years on backtest. I've taken 500 plus trades. I'm not confident. I'm taking these losses. And I don't understand why. It's because you aren't back testing while you aren't journaling your back tested trades. So this is important because you have to recognize what is the difference between your losses and your winning trades. So before I kind of get into how you can figure out what the differences are, I'm just going to kind of go over what your journal should realistically look like. So as you can see here, we have all the basic stuff, the date, the session, and really if you're starting out, you should only have New York AM. You're not going to be trading really Asia or anything else. Direction, if it was either a short or long trade. Pretty self-explanatory. Break even, dub, L. The P&L trade, and the risk to reward. And this is important to know, risk to reward, because if you have like a 50% win rate, this can still be profitable if you have like a 1 to 3 RR or whatever it is, and then vice versa. If you have like a 90% win rate but have like a under 1 RR, it can still be profitable as well. And then the kind of execution of the trade, so I'll go over that in a little bit. I'll go over all these trades. And then kind of the confluences. And for this confluences section, I used to have like a drop down menu of like, 5-minute fair value gap we tapped into, all the different confluences you might have. But I changed it to a text box just to kind of go over what I see in this trade. And I don't want you run like 3 paragraphs and having to scroll through and read for 5 minutes at a time. Just kind of vaguely go into what we see. So we look at this trade here, we have a few draws down here. So let's see what I said about it. So we just spliced through a draw in the morning. So let's go back to that. We just spliced through this draw. And you see there's still good displacement after. So clearly it looks like we're going to target these lows just by the looks of that. And that's why I say. And then we kept displacing through it, came up, but didn't tap any fair value gaps. It's not the most ideal. So what I'm saying there is we just kept dumping. And once you see this candle, you're probably thinking, okay, I want to see us retrace into 1 minute, 2 minute, whatever it is up here. We didn't get that, but we still had good displacement out of it, which made me think, okay, we didn't tap this 1 minute or 5 minute, whatever was up there, but it still looks like we're going to come and take out this low. So that's why I was thinking in the trade, exactly, but we saw strong rejection lower still. And since I was currently on evals, decided that draws were clear and we had good displacement and a safe draw above that 1 minute fair value gap. And also ES was correlated, so it looked like it definitely wanted to go lower. So yeah, pretty simple. Just going over my thought process about this whole trade, good draws. And then I kind of had them, the targets were just hourly lows. I'll get into that later. And then kind of emotions on the trade. This is important because, see, you look back at a winner and you forget what it is, whatever the case may be. You're like, okay, it's a winner. It's probably a good trade. But then if you have like your emotions were bad, you can go back and be like, okay, why were my emotions bad on this? Okay, it's because maybe, it was great here, not perfect, because we didn't tap that 1 minute fair value gap above. So, there's times you can have a perfect trade, everything lines up, and then there's other times you might have like a mediocre trade, and there were a few things that didn't necessarily line up ideally, but it's still like an A-rated trade to take because you had great draws. And that's what targets is. You kind of can create like a bunch of different targets. These are all the ones I have. If you want to copy them, you can go ahead. These are like the main ones you're always going to see. So yeah, and while a great target, then you have like the hourly lows, hourly highs, the 1 hour, 4 hour daily, all-time highs. You can go through all of them. Basically, like you can just see them right here. So copy that if you want. But we're going to kind of get into the next few trades here. And I guess I'll go back to the document here. So yeah, coming back onto the point to why it's so important to recognize the differences. So we'll go over this loser here and we'll just see what it is. Okay, so this one's not necessarily the greatest example because right here, boom, I say it's a statistical loss. we were targeting CPI data lows in the morning. We came down strongly, then came back up and tapped a 5-minute and even had an SMT with it and a strong rejection, and it stops us out. So yeah, this loser, my emotions were perfect. Like I was like, okay, if this loses, I'm 100% like A-okay with this. As you can see, we tapped this 5-minute. We just seem to be dumping the data lows here, which is a very strong draw on liquidity. Tapped the 5-minute, instant rejection of it. I guess I could have went break even on this. And looking back, I definitely should have. So this could be a break even trade. That's something you could write down here. I'm actually surprised I didn't. Maybe this just, I don't know. But yeah, definitely could have went break even on that. Maybe I just didn't because data low is such a strong draw. We should have realistically taken it. But yeah, that's something maybe I could have done great on for my emotions. So we'll move on to the next trade. So here is where the difference is. You can kind of see what is. So even though my emotions are perfect, I say in the confluences, gets a little choppy on high time frame, but still good displacement lower. We tapped a 5-minute and a really good candle displacing out of it. So it looked pretty clean to me, targeting NWOG. So we look at the trade. Yeah, it's exactly what happened. We're dumping, and if this is NWOG down here, dump, doesn't look like any sign. We just need a retracement. Boom, we got a retracement. Great wick out of this 5-minute. Great displacement out of. And then unfortunately we weren't able to get break even here. So yeah, you can kind of tell the differences between a winner and a loser just because like this might look all right. Like this looks A plus 100%. But then I say, okay, choppy on high time frame. So you don't see that in the picture, but I'm writing it here. So that's the difference. You know, it was choppy on high time frame. So I gotta look out for that in my other losers. And then we'll just take a look at this last trade here that I kind of took. Boom, 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 the date. You know, it was a long trade. It was a winner. 1.2 RR, 900 basically. And here's the execution. And yeah, so the only thing is that we are currently in a big bearish 4-hour hourly gap. But after displacing like crazy in the morning, higher and higher, and after a little bit of chop, we tap down into a 5-minute with decent displacement and target the 1-hour rebalance in the range. So I kind of know what's going on in the day. I can see we have this drawdown here, displacing through it. We edge this high, come back down, tap the 5-minute, good displacement out of it, and run. So you can kind of see slight differences between your winners and losers, and you have to implement and start putting that into live trading. You know, you need to always be consciously thinking about your losers and what trades to kind of avoid. And yeah, so overall, it is very important to have a trading journal, guys, especially a backtesting one and a live trading one, because especially when you're starting out with a strategy and you're clueless kind of to everything, it helps with learning to be confident in a strategy that will actually translate into the live market, right? And this kind of goes on to my last point, right, about how people backtest years of data, but they actually have no data to show for it because they don't journal. So realistically, in their mind, they journal that, you know, had a 60% win rate, whatever, but they can't actually go back and nitpick the tiny little things that attributed to the losses that they took. So they can't analyze any of the mistakes. So that's going to kind of wrap it up here. Hopefully you guys understood and gained some, you know, sauce out of this. Just kind of a basic video on how to journal. Once again, you should be journaling your backtesting trades. You can even have a separate one for live, you know, forward testing, or you can just put them in the same journal, just like put them differently so you can recognize that. But yeah, it's really important so you can recognize and kind of see the difference between your winning and losing trades. And then once again, overall, it helps with learning so that you're actually confident tackling the live markets. So yeah, hopefully you guys enjoyed that video. And yeah, pretty simple. I'll see you guys in the next one. Peace out.